Hey everybody, Real Estate Ninja here. I hope you're doing well. Hope you can hear me. It's a little breezy out here. We're going to be talking right now about the bond market. If you don't realize that the collapse already happened because the Fed's been bailing out banks, there's all kinds of craziness going on in the world, but also the government's trying to bail out, debtors. They're trying to make homes available for people with bad credit. Then I don't know what to tell you. But we're going to talk today about the bond market. It's very important because, all of this excitement, the Fed's going to lower rates. If they do it, which I believe they're actually going to do it, a couple little things. It's a head fake. It's a joke. It's a joke. It's not going to last. And the reason why they know it is because first, they haven't gotten in control of inflation. They have not raised rates high enough and broken the back of the consumer, which means more unemployment. And there are a lot of people right now that are about to be unemployed. So you need to start looking for a side hustle. I'm not joking. Start looking for other streams of revenue. If you want, I'll put some 50% off coupon codes to my course on it, but you don't need a course to go out and make money, okay? You just need it to save time and money if you want to learn that way. But check this out, the bond market. The story at a zero hedge. It's entitled the first 10-year auction, 10-year bond auction of 2024. Prices to tepid demand, fourth tail in a row. This is what it means. Before I read the story, when the government comes out and needs money because it's a debtor, we're in a debtor nation, and they go out and say, hey, we're going to sell 10-year bonds, and we're going to offer them an X amount. I don't know what the daily rate is. I haven't looked yet today. But they go, okay, so here we go. We're going to give you 10-year bonds, let's say at 4.5%. Auction's open. Don't be shy. You don't, come on, first person's going to bid. There's no bidders. What are you talking about? There's no bidders. Crap. All right, well, we need to raise the money because we're the debtor nation. So, okay, we got to raise, whatever, $1 trillion, whatever it is. We're going to offer 4.6%. What? Nobody? You don't want to loan us money at 4.6%? We started at 4.5. Crap, 4.61%. Crap. And so what's happening is, by the end of the begins of the day, 4.5, let's say. I'm just throwing out arbitrary numbers, okay? Then it goes up, and by the end of the day, to raise their money, they got to offer a lot, and that's called a tail. It's bad. It means nobody wants to loan the money to the government. So I don't give a crap what the 10-year bond is sitting at on CNBC. I don't care what you think about, oh, the Fed's going to lower rates. They said pencil in. Ninja, you're wrong. You're an idiot. I'm not talking to 99% of you, but there is one idiot in there. Just watch. Go read down the comment section. You'll be able to find him real quick. And he probably doesn't own a home, lives with his mom, and doesn't have anything, but it makes him feel good to insult somebody. I mean, honestly, type 1 if you know that I'm right. There's that one guy in the comment section. So we have had multiple auctions of bonds, treasuries, in the last 4 or 5 months as the world is walking away from our nation. They're saying, no, we don't want any more of these crappy dollars, and I don't care what the value you think the value of the dollar is. It's going down everywhere, because I don't know if you realize this, other than a flat screen TV or a piece of furniture that's probably really ugly, nobody's buying anything. Like everything else is going up. So it's gotten so bad where China actually had to, and I did a video about this, I think in November. They did this 30-year auction, the government auction, and it was horrible. Nobody showed up. And then I said, oh, China made an announcement that said, we cleared all of our trades. We want to make that clear. And then by the end of the night, they're saying that China's largest bank got hacked and it wasn't their fault. I mean, that's why nobody bought the bonds. See, our government's actually trying right now to lie to you, to make you think that they're in control. The Fed's lost control. It's over. It's going to keep getting worse. We're going to keep doing stories about this. So let's read the story, shall we? And I don't tell you, I'm telling you this. I've got all my students in the crash course prepared. I'm trying to wake up as many people, now that I stopped selling that course. And I put that in the hands of my students, actually. Oh, by the way, to the student that emailed me a while ago, and I gave you a free course because you just bought your first house after the crash. I lost your email. I need you to email me back again. You're in a duplex and you never had the faith to buy your first house. Please email me. I want to do something with you and show some people something that everyone can learn from. So please email me. You already have my email. All right, sorry. Okay, here we go. Out of zero hedge. First 10-year auction of 2024, prices to tepid demand. Fourth tail in a row. It says, one day after a stellar 3-year auction launched the coupon treasury issuance for 2024. Let me just throw this out there too. Do you know why the 3-year was a stellar auction? It's because a lot of people that have a lot of money, they want to make a little rate of return, but they're scared crapless to lock up their money into 10-year and 30-year bonds. Why would they do that? They know where inflation's going. So they'll stick with 1 month, 3 months, all that crap, you know, the lower stuff. They'll put it out there for that. Oh, and just so you know, that's not individual investors, it's actually pension funds. If you knew how it worked, and I'll just explain it, index funds, pension funds, funds, all kinds of funds, they're not fun because they steal most of your money in fees. They have a prospectus that you signed and you agreed with, and so a certain amount of their money gets allocated into stocks, some of it gets into bonds, and they sit there and they go, we're gonna lock and we're gonna make it safe for you. We're just gonna lock it up into 3 years and 5 years, you know, short-term sort of debt obligations, but we're gonna get a solid rate of return. So that's the people that are actually buying it. It's not actually people, it's funds. I don't give a lot of crap about that stuff. Sorry, I digress. So it says here, you know, hey, after a stellar auction launched with the coupon treasury issuance of 2024, moments ago, we got the sale of the first bench piece of paper for the new year, when some 37 billion in 9-year, 10-month reopening were sold to the public in a generally strong auction. Generally. The auction priced at a high yield of 4.024%, which was a sharp drop from December's 4.29% and was the lowest yield since 3.999% in the August auction, and was the lowest yield, or sorry, more notably, the high yield tailed when issued 4.019% by half of a basis point. Now, it says that this was, I know there's a lot of you guys, your eyes are like rolling back in your head. You either, you know, totally confused or you look like a great white about to eat. Stand by. This was the 4th consecutive tailing 10-year auction and the 11th nonstop through auction in a row. More remarkably, there have only been 3 stop-through 10-year auctions in the past 27 months. The bid to cover was better, rising to 2.56 from 2.53 and the highest since February of 2023. The internals were average, with indirects awarded 66.1% up from 63.8, but below the recent average of 66.7. I stand by, I get it. The eyes are still rolling. Stand by. It says dealers were left holding on to 15.1%, just inches above the 6-year auction average of 14.5. Overall, this was a mediocre auction, which could have been worse, but also could have been better if it weren't for the now chronic inability of benchmark paper to sell without tailing. Now I want to repeat that. It says right here, if it weren't for the now chronic inability, so this has become an issue. It's been going on for a while. We have so few entities, individuals wanting, desiring to buy U.S. government debt, that the auction starts and they've got to, throughout the day, raise the interest rate just to be able to get people to buy it. Okay, that means we got issues. You're gonna need some tissues. I know I'm a poet and I definitely know it. So let's think about this through again. You have the BRICS nations separating from the world. That means less countries, foreign countries, are buying our debt. They are now doing more and more business every day. This is not becoming every month and every quarter and every year thing. This is like every day. There's a new agreement being made, it seems like, in the mainstream media. And people don't understand how big of a deal this is. So you got the Federal Reserve. Oh, we're going to lower rates someday after we crush you. And everyone's like, oh, Papa, please save me. Because that's what the economy needs right now. The economy's dying unless you lower rates. Well, the Fed's never lowered rates unless there's a collapse, a big crash, okay? And then you've got the bond market running completely opposite of the Federal Reserve. As a matter of fact, even Jerome Powell came out like 8 months ago and said, you know, we don't even have to raise rates anymore. This is great. The bond market's doing it for us. And what he was telling you, and I was making it very simple, is that he's sitting there going, no one's going to blame us. See, it's not our fault. China stopped buying our bonds. Japan's like looking to sell our treasuries. That sucks. But hey, it's not our fault. And they don't want to be at fault. They don't want to be blamed. They don't want you even knowing their private bank. Maybe that's why I keep losing subscribers. The Googly doesn't like it. Point being is this. You're not going to see lower rates enough to drop the price of real estate. Well, no, sorry, real estate prices are dropping because interest rates are staying high, and eventually they're going to go higher. They're going to dip a little bit. The Fed's going to lower rates. That ain't going to do crap to the mortgage, the 30-year mortgage. You're still going to see buyers dry up, and you're going to see more houses hit the market. I have looked at 3 foreclosures in an area that I'm looking to buy. I'm not jumping in yet. I'm going to be putting in 20% offers to the downside, but then I'm going to be cash flowing those properties, and I'll be doing those in the next 4 months. But my point being is that most people cannot see where we are. And it says, just like it said here, it's a chronic inability of the benchmark paper. Benchmark. The government standard, baby. The best of the best. It's not anymore. To sell without tailing, meaning to sell it without having to raise the rates in the middle of the auction. Suggesting there is a far deeper and concerning demand problem for US paper. Well, the ninja has been telling people that for like a year and a half. This is exciting times. This shouldn't be doom and gloom. You should be foaming at the mouth getting ready for this. If you aren't getting out of debt, if you're not cleaning up your balance sheet, you're not getting your credit score even higher right now, if you don't have a whiteboard in your bedroom saying, I'm gonna start this entity, this LLC, this C Corp, I'm gonna sell this out of this, boom, 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 I'm gonna take advantage here, 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 I'm gonna put this money here, put that money over there, then you are going to miss out. Now, like I said, just go and start a side hustle. Like, I'm not joking. This is the greatest time in the world to start a side hustle, and I'm gonna put my money and my life where my mouth has been for the last 3 years. I haven't made this announcement publicly, but I'm leaving my job. I know that I'm gonna make another video about it, but I told you before, and I'll say it again, the best time to start a side hustle without debt, do it with cash, start small, is during a crash. And I mean that. I don't want to put everything on the line. I'm going to put it all on the line. I'm walking away from a career of 22 and a half years with only 2 years left. I walk away without a pension. I'm going to do it. Because I know how much money I made back in 2008, 2009. That's child's play. This is going to be exciting. If you want 50% off coupon codes, they're down below for the side hustle course. I'm going to be improving that course, and I'm just going to crush it throughout 2024 for you guys. To all the students, expect some new lessons coming on starting in about 8 to 10 weeks, because I have a big launch of the new real estate course that's going mainstream. But thank you to everybody that supported me. Again, to the student of the real estate course that never thought he could buy a house, he now lives in a duplex because he bought it right and saved a bunch of money. Please email me. I lost your email. I want to do something very special with you. So I'm super excited. All right, with that being said, the Real Estate Ninja is out.